Hey everyone, welcome to Options with Hans. I'm Hans Albrecht. I was a pro options market maker for 15 years and an options income fund manager for a decade after that. $1 billion in option strategies managed. Please like and subscribe. Grab my free ebooks down in the description. And today you're going to get info on my huge launch of my July 4th sale, which is going to be Leaps Trader, Leaps Explosion, Leaps Trader AI, Crush the Premium, indicators, complete systems for using options in the absolute best ways possible. All the good stuff with much, much less of the bad stuff. This is a comprehensive approach. It is absolutely everything you need to get to what I call a volatility and options ninja. So I am excited about that. As always, this is for educational purposes only. Your trade, your responsibility. And if you're okay with that, let's go ahead and dig into a theme with so much runway on it, you can't even fathom that runway at this point. At this stage, we're talking about GPUs and that kind of stuff. And absolutely, NVIDIA, it's captured the attention of everyone from the AI standpoint. But inference is absolutely key to this next phase. Forget about what you've seen the last 2 years. What is less appreciated right now is that this inference stage is going to create untold vast amounts of data. In fact, unlike anything we have ever seen, and there are companies that are in the very right position to take advantage of that. We're going to talk about one of those today. Okay, one of these companies is Snowflake, one of the foremost companies out there. There's going to be almost like putting this helmet on top of your company and starting to reason and put things together and grab all these siloed areas of your data. Think of a cell phone company, all these different areas where they're getting data and put it all together and make sense of it, turn it into cost savings, turn it into monetization opportunities, et cetera, et cetera. So we'll talk about data. What does Snow do? Total addressable market, the TAM, option pricing, and then we'll talk about my turbo trade, which I love in stocks that have really had a bit of a run. Sometimes I like it when option pricing is very, very high, which it isn't here, which is nice for us. But I like it then. So you want to create upside, but not have that commitment of getting in right here. Beautiful trade to accomplish some of those things. So let's talk about the general theme of AI. This is it, right? This is just a whole new world, right? This is a productivity pop. That's what the inference phase is about. It's about people starting to do things at light speed with the things that their normal processes, whether it's marketing, designing, things like that. It is just starting to really upscale, basically. So this is going to create this infrastructure arms race that is going to create incredible amounts of data and is going to involve companies across every industry trying to figure out where can we make use of this. This is another phone ringing off the hook kind of company like a Palantir, right? And Jensen talks about this 100 times surge in inference workloads. Make no mistake, listen to Jensen. He is telling the truth here. This guy is telling the truth. He does what he does very well. He manages the public, he manages investors, but he is telling the truth. This is going to be massive. We can see 700-800 million people already using Gen AI tools, the Chat GPTs, the Claudes, the Groks, things like that. The crowd is hungry. They are learning. And as more people learn, the more this is going to become a very exponential chart in terms of what it creates, in terms of the infrastructure needed, the GPUs, the proper GPUs, the stuff that AVGO does, the stuff that Snowflake is absolutely doing. So this is Snowflake's opportunity to really, really shine. This is going to be an amazing, amazing next decade. So data, it's all about more and more data. Think about it. Every prompt you do, every time, think of what's happening with robotaxis starting to proliferate everywhere. These things have thousands of sensors bringing in data at the edge. Think about data at the edge. We're going to be creating billions of devices, from sensors to cell phones to all kinds of things that are going to be drawing in more information. So these things are going to be everywhere. This is all data. What are they going to do with all that data? Where are they going to put it, and how are they going to make sense of it? That is where inference comes in. It's going to be a very compute heavy time in the phase of AI that we're talking about. So think about it this way. The sort of typical formula is kind of, up to this point, has been sort of 80% training the AI, right? Feeding it 10 million pictures of a cat. And then it has been 20% inference. Now we're flipping to 20% training and 80% inference. You can see where the focus is going to be. And this is going to breed like wildfire in terms of the data that's going to be created, right? Jensen talks about this jump in flops, right? That's basically, flops are kind of like the steps that a chip has to go through through, and as it starts to put all the information, that is going to increase at an exponential rate. So incredible data that's being created. So you can think of it as kind of almost in simple terms. I was telling my son about this. I said, listen, think of it like building a robot. There's an upfront cost. It's very, very important. You put all that time and effort into it. But running it, when it starts to make its way into helping you with your life, right? Let's say it's a helper around the house. It does this and that and the other thing. It starts giving you information, helping you with your homework, your work, everything. That is inference, right? Training is school time. Inference is work time. And inference is much bigger, right? Compute and data creation is going to expand 50, 100 times, 200 times. It's going to be absolutely incredible, because every interaction in the world that AI has, which is increasing at an exponential rate, is a data point. Data, 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 data. So let's talk about the data numbers that got here. In 2023, the world created 120 zettabytes of data. That is a massive amount. Don't worry about how much that is. It's huge. By 2030, it's going to be 500 plus zettabytes. I think that is way, way under the number that it's actually going to be. So ready to have your mind blown by this stuff as we move forward. So let's think of Snowflake. This is it. This is what it's all about, right? So this is a data warehousing company. As I mentioned, it's kind of like, applying the ability to take in all these siloed bits of data and start to make sense of it. So think of it as a solutions company as well, where it doesn't do the full job. You've seen Snowflake actually working with Palantir in a kind of stack to start to really create amazing insight and value for companies. So it's helping companies really unlock the power of their data. And in this fever phase where everybody's trying to figure out, well, how the heck am I going to get involved here? And it's going to be phones ringing off the hook. Get this done. It is not going to be a cyclical thing. Good times, bad times, good economy, bad economy. This is going to be relatively full speed ahead at this point. That doesn't mean valuations, multiples can't change in stocks. We know that can happen. But in terms of the storyline, it is absolutely very, very strong. So Snowflake is really starting to use more AI in its processes to aid in what it is delivering to clients, right? So it's basically bringing all this data together and enabling clients to really, really make use of it. So if we look at some of the metrics, we won't spend too much time on this, but the demand for that cloud platform just keeps increasing. But I think we are at an inflection point, right? So the data that we've seen up to this point for many companies has been strong for companies like this and data center companies, et cetera, et cetera. I think the inflection point is upon us, and that's what people are underestimating. It is going to start to rise at an exponential rate. So very, very amazing stuff. I mean, we're seeing that they're investing very heavily. That's what a company like this has to do. So very, very heavy investment. They need that growth to continue to happen. And I believe it actually is happening. So, enterprise software as a service is a very nice place to be. I think ultimately there could be some pricing compression at some point, but right now we are in the fever phase of what's going on. So in the end, you look at these numbers: 606, a million plus customer, right? So customers that are spending $1 million minimum, 606. That is going to explode in the coming years. So Snowflake growing fast. They're guiding up. They're showing that it can print very nice profits at this point, GAAP profits anyway. And eventually, this is the name of the game, is really grabbing market share, right? Think of market share. Think of what NVIDIA has. People, don't realize that they have this incredible sticky market share because of CUDA, their software system, the fact that they do what they do best as compared to many other companies. Let's look at the charts here. We can see that we're breaking out of quite a long downtrend line. I'll show you the weekly in a moment, but very nice move here. Of course, we've come back from quite low levels in that sell-off in April, but really this was kind of there was sort of very negative sentiment towards MAG, towards even AI to some extent, even though all the hyperscalers were saying, no, we're spending. So now here we are, but in this kind of narrative sort of flip, this very important fork in the road as inference becomes more important. I think this puts companies in a different kind of light, some in a better light and some in a maybe more negative light, as well, as we've seen with a couple of names that are being threatened by disruption. So nice little breakout there. And if we look at the weekly, going way, way back to, 2020, we can see that we had a very, very nice run and then came down. broke down through this sort of traffic jam area here, and now here we are. I think we head to old highs, and then I think fundamentals multiple is going to be very, very expensive, but I think it's going to maintain a certain premium because of what it does and the being in the right place at the right time. So multiple probably stays expensive unless we go into a recession, which I really don't see happening. Eventually, we're going to have rates probably come down sooner rather than later. I think they're going to actually be heading down big time, which makes some bond trades kind of interesting. We've been adding some of those in Leap's core because I really think there's going to be a big compression of rates, which some people don't agree with, but I think it's going to happen. And let's take a look at chart here. We've got my MTI sort of turning yellow again, right? I'd like to see that. We've had some nice greens in here, so that kind of got constructive after all this red, got constructive in yellow. This is stuff I teach in my Crush the Premium, which is another sort of thing that you get with the program, right? So you're going to learn these indicators. You actually get the indicator. So we've got this turning really, really nice and healthy, kept you in the trade. Had you pause for a commercial break in here, which is where it's telling you, look, things are still okay, except for this little period here. Things are still okay. That's more of an income type trading environment. I'd like to see this flip up. If we get this volatility dampener down here start to seep, if we get a little bit more fear seep out of the market, this is going to flip green very, very quickly, which is going to give us the typical turbo trade. But because of this narrative, because of the strong story for this particular company, I think the time is now. So what I'm suggesting for the turbo trade is really something like this. So we're going to go to December 2026, which is selling the 170, 140 put credit spread, right? So we call that a bull put spread because you want things to generally stay positive. You can tolerate a certain amount of move down to that 170 level, which is significantly below where we are now, and you're going to get $8.88 for this particular spread, the 170, 140. It's quite wide, but I want to get a little bit more of a credit here, but I do want that protection, right? I've got this extra put down here in a vertical. As you'll see, if you ever take the mentoring program, I tell you when I like to really have that extra soldier. But for most people who want to kind of control capital and have that capital efficiency, this is a good way to go. So and then you're going to use some of that. You're going to use all of that to finance this upside. So the 250, 290 spread. So you're getting 887. You're spending 1245, which is, what is that about? Spending about $3.50, which you can see here. Your maximum loss between 250 and 170 is $350 for a one contract position. Below that, you have a little bit of downside that you'd have to sustain, and then you have your little protective soldier helping you at the 140 level. But the idea is we are financing this upside. We're going to play this turbo to the upside. I think generally speaking, let's take a look at some of the option pricing here. It's really not very high. So if you look at low, pretty low option pricing in the near term, which is probably reasonably, I think, fair given the backdrop that we're in, and the market keeps kind of ignoring some major things that are happening out there. So I think it sort of makes sense with realized volatility down around 12 in the market and the VIX pricing kind of 17, 18, 19. That's too high, right? The VIX is technically too high. I know some people think it's too low, but it's technically too high for the movement that we're getting. So if you look at option pricing, it's really, really in the basement. That gets me excited about some of these longer term plays. So very exciting there. And if I look at the skew profile of Snow, you can see puts are still a little bit expensive. Sort of, they're really not pricing too much excitement into the upside. Oh, we got this terrible view here. But if I look at skew to the upside in the longer term positions, right? In the shorter term, you get it's a little bit flatter, which by no means everyone's super excited about the upside. So I like that, right? To me, I probably start to get a little more cautious if people are really getting crazy. If you look at oil the other day, it had call skew just absolutely blow through the top, which is why I was saying short oil. Somebody in my community said, you were the only one saying short oil on Monday morning, and of course it dropped $10. So a little pat on the back there. But if we look out a little bit further, look at this. They're really not pricing that upside the implied vol, right? The option pricing is low, and the skew is really favorable for some of these upside plays. So we're really financing the cheap upside with some of that expensive downside, which is really a nice thing to do, right? You're kind of putting yourself in the position of the casino, right? You're taking the edge in volatility in options. We can kind of find edge in certain places, which actually are very, very positive, right? There's positive edge in selling some of that downside skew in many, many products. So that kind of gets us into this trade, which I think next time I'm going to do maybe a leaps type trade, maybe even a cash machine trade to kind of show you how to basically grab some downside skew. Really, when you sell that, in the money call, you're actually grabbing the downside put skew, and I'll explain that later. So hopefully you guys enjoyed that. I think this is a trade that could do very, very well. Worst case scenario, you end up owning Snow at around 173.5. If you figure out the P&L on that, 173.5, pretty good for a company that is really starting to enter into a period of, I think, what is going to be a lot of prosperity. So hopefully you enjoyed that, and we'll see you in the next video. And don't forget to check out, grab those ebooks, check out the sale that is on, the July 4th sale. It is awesome, and it's going to get you, in my opinion, everything you need to get going on both income, leverage, and the best of all worlds in options. So take care, everybody, and we'll see you next time.